U.S. and China trade negotiations, traders getting over their skis. We also saw inflation making a pullback this week, and we closed out the week with the confirmation that the consumer is just downright struggling. Welcome to the Friday wrap up with yours truly, Kevin Weedmark, aka the Mortgage Mouth. Thank you for joining. I bring this to you on the weekly basis every Friday so that whether we're doing open houses, taking clients around, running into somebody at a grocery store, we just want to be in the know, make sure we're all beating to the same drum. So let's talk about what happened this week. As we opened up the week, the big news last weekend was U.S. and China doing a tariff negotiation. And although there was no set announcement and nobody really knows what it means, basically it was a 90-day pause. We took 145% tariffs, 145%, all the way down to 30. That got traders really excited. What the perception to them was, well, we're not going to go into a deep recession. It looks like we're going to be able to avert one. And I know there's speculation. Are we in a recession? Are we not? I'm here to tell you right now that in the future, take it 6 months down the road, maybe a year, we're going to find out that we're in one right now. It's a matter of how deep is that recession going to get. Traders looked at it optimistically, and what we saw is towards the beginning of the week, rates on the rise. And what I said at that time is traders were getting over their skis, and that's exactly what happened. We have to take a step back and look at what's been going on mainly this year under this administration. It's been a roller coaster of interest rates with very sharp peaks and valleys. From, I bring it up all the time, the easel board towards, what was going on with the border, immigration, you name it. We've been up, down, all over the place. And this administration, while they're very open to talk about their policies, nothing's really been negotiated yet, right? Nothing has been signed on the dotted line. It's all kind of a negotiation of back and forth. We're going to do this. We're going to get that. This is going to be the benefit. But at the end of the day, I want to be really clear. Nobody knows shit. Nobody really has the crystal ball that says this is what's going to happen because this has been inked and this is the result. So that's why we see these huge peaks and valleys, all based off perception of where we think it's going to go. Where do we think the plane is going to land? And when I say we as a collective trading group. I mean, they're the ones that are really dictating where are they investing their money. Are they going to go into the stock market? They don't want to miss out, which is what we saw earlier this week. They don't want to miss out on a crypto run, so they sell treasuries. They're just not sexy. However, with inflation coming in this week, CPI and PPI both pointed out that inflation seems to be under control. It came in just slightly less than forecast, which is a fantastic thing because everyone's major concern is, holy shit, the tariffs are going to wreak havoc on pricing. And they may, going forward, have a little bit of an impact. But it looks like it's not going to be as severely thought. And that's why I said everyone was getting over their skis. Treasuries weren't sexy. Everyone was chasing the down run and the crypto run that we saw this week. Whether they were awesome or just slight, they wanted to go make some money. And by the end of the week, we saw that correction. We saw it all pull back. And a couple things really helped with that. Number one, we had a lot of Fed members speak this week. And in particular, we had Fed Chairman Powell. And when he spoke this week, they all seemed to be sticking to that same script. They're not really getting into the political side. They're staying very in their own lane. They seem to be saying exactly, look, uncertainty remains. The labor sector looks pretty stable. We're hoping that can continue. That'll help us from a slowing economy. Even though we're slowing down, it'll avert a really deep slow in the economy or a recession. They don't really like to use that term. Wonder why. And also on the inflationary side, hey, we're still uncertain of what these tariffs long term are going to pan out. But right now, everything looks good. We still believe there's 2 cuts. We're just going to kind of hang out. And that's really all they've been saying. And it's been giddy up. Market likes it. You're still telling us 2 cuts. You're going to sit on the sidelines, not say too much. You're not going to rock the boat. We dig it. Thank you very much. And it's had very little effect. So that's been one thing. And the other thing that we saw is with inflation pulling back, it's given investors kind of a pause to say, oh yeah, we were over our skis. So if inflation's going to take a back seat, we don't really need to worry about that. Then we have oversold treasuries because, once again, what did I say at the beginning? No one's really sure of how this is all going to play out. So we do see a slowing economy. We are getting earnings that are showing some slowing. We're still getting job cuts. Maybe we will see a slowing economy. And then kind of the icing came on the cake, although the market today kind of just took it in stride, but I think it's going to rear its head next week. I think what's happening as we head into the weekend, and let me get back to that in a minute, of why we didn't see a good run in treasuries today. But what we saw today is we saw the release of consumer sentiment. It's awful. The consumer is feeling the pinch, the fear of the rhetoric, whether they're seeing it at the store of what they're buying, or they're just hearing the rhetoric that tariffs high, 145%, bad, bad, bad. The other thing that we also saw is we saw building permits. Horrible. A horrible number. Now, we saw starts pick up, so they're a little bit more optimistic. But as far as permits, the future, not so good. The other thing we saw is retail sales. Core retail sales was down. That was something that, in my opinion, caused traders to say, we are over our skis. Wait a second. And the slowing of the economy, GDP, moving closer to a potential recession, how deep is that going to be, is really the major concern, and it's not necessarily inflation. So that's why we saw that slight correction. Now, today what I think happened is, I think a lot of traders are saying, okay, we got that information, but let's not be foolish. Let's not make a huge run into treasuries, because as we learned from last weekend, we could get a fiscal policy or a trade announcement, and all of a sudden we walk in on Monday, we're in a bad position. We're going to lose money right out of the gate. It's going to start the week off on a shitty note, and we don't want to do that. So we're just going to kind of chill out. Next week we have very little data that's coming out until we start rolling into the heavy side. So I think what's going on is, I just think a lot of traders said, you know what, let's just stay put today. We digest this data. Let's let's see what happens over the weekend, and we'll start to play ball on Monday and Tuesday with all the data that happened this week. And what I think we're going to see is, I think we're going to see a little bit movement back into the treasuries. I think we're going to see a correction. We're going to see a little bit of a sell-off in both the Dow. We're going to see a little bit of a correction in crypto. We're going to see more money flow into the treasury side in the early part of the week. And then I think we may see in the later part of the week, maybe a correction back a little bit to where we currently are as we head into a very volatile week the following week. Like I've been saying, I think the 10-year treasury should be sitting between about 4.27 and 4.35. I think we're closing at 4.45 today. So I think we're oversold a little bit. So that's the message of, look, make sure when you're communicating to people that it's okay to go look at houses. When you make an offer on a house, you got 30 days to get to a closing table. As we've seen since the beginning of this year, in every 30-day cycle, there's been at least one valley, which means at least one solid opportunity, if not two, to lock in a really good interest rate. And we've also seen peaks. So don't hesitate if you're on the fence to say, well, I'm going to wait for rates to be low. Look, I'm going to show you right here, right? Last week you would have been looking, maybe you found something. Well, this week, not so good. So don't worry about that. We're getting the peaks and the valleys, and that is going to continue until things get cemented. I'm talking sign wet signature agreements on trade and things like that. So I wouldn't really be concerned with, I got to precisely pick the time and I think and this. No, I'm telling you right now, we're going to ride a roller coaster. We're going to have peaks and valleys. Ride out those peaks and lock those valleys. I'm around all weekend as always. Please don't hesitate to give me a call, text, email. You need whatever, pre-approval, flyer. You just have a client that wants to talk shop, or you yourself would like to sit down and learn a little bit of the back end of the mortgage side, how I price loans, why I'm different, how I have a passion for saving a client's costs on both the cost to get that loan as well as the rate. And please, lastly, jump on this YouTube channel. Please give a subscription. Would love to grow that so I can bring you great content every day and keep you in the know. Everyone have a wonderful weekend. Cheers. Happy selling.